Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here. A couple minutes late. Apologies, had something just come up the very, very last minute, but we're here and we're not going anywhere. All right. So there we go. So I had to fix a setting there. All right. So I think the NASDAQ's going to continue down here. Also, silver should continue down. And it's just what we talked about. You know, I sent out a letter yesterday to all of us in the mailing list, right? And I let people know that I think silver is going to fall, and that has to do with the Chinese New Year. If you want to receive those weekly letters, so it's a weekly newsletter, plus I attach the video version of that most weeks, which the video is going to come out today, not yesterday. But if you want that, go into the link in the description, get the free algo. It's a video where I build an algo for you. It takes not very long at all. I explain it, I build it, I turn it into code using Grok. And then I show you how traders connect their algos to their broker so that it can trade for them when they're not even sitting at the computer. And it's a lot easier than you think. And it's all in that video. Now, the algo itself, you got to optimize that before you trade it. It's not plug and play necessarily, but conceivably it could be profitable for you. But it's more to show you how we do things, right? So go ahead and do that. And you will be also sent weekly the newsletter. And in that newsletter, we talked about this stuff. So I'm going to go ahead and start with the NASDAQ, though. It continues to be vulnerable. An important spot on the NASDAQ is right here on this 3-hour chart, which is 24,243. And just below that is an even more important level here, 23,882. So 23,900 basically. And these are 2 areas where NASDAQ must bounce or it will go most likely a bit lower. Now, we are in an interesting environment as far as the rest of the market is concerned. This is the NASDAQ, remember, so this is tech heavy, but it is going to affect everything else. Good morning, Mick. And to understand why one market affects another, it's actually really, really simple. Everybody, it's all debt, right? Everybody is borrowing money to fund their trades. And so when you borrow money to fund a trade, you have to put a certain amount of money of your own in that trade. And if the trade goes against you far enough, then you have to put more money to keep that trade alive. It's called margin. You have to continue to add your own funds to a trade that goes against you, which means that you have to sell other positions. You have to exit other positions to get that money. And when you have to exit other positions, that means the whole market goes down because everybody's exiting positions everywhere. So even though you would think something like, hey, silver should go up if the stock market is going down, right? That's one example of the way that people would see it. That means that silver would go down because people have to sell their silver position, right? If they're betting in the paper markets, they have to, or even if they have physical, they have to sell to keep those other positions funded. And it's just this big, nasty triage situation. And this is why when some markets go down, all markets go down because the market is very heavily levered. So right now, the NASDAQ is starting to experience some issues because the water is receding. And a lot of people are seeing that the tech companies are skinny dipping, right? Meaning that everybody's on the ocean, and the companies that are properly funded have bathing suits on. And then there's other companies not properly funded. They don't have any bathing suits on. And the water, though, is a nice high tide. There's plenty of money in the system and everybody swims around and nobody knows who's got clothes and who doesn't. But when things start to go sideways, when the money starts to go away, when positions fall apart, when people discover that, our AI sector is really overfunded and it can't stay at these levels and it is going to fall, people start to sell positions, the water starts to go out, and you start to see who's naked and who's not. Now, the Dow, as compared to the NASDAQ, I'll do a quick click on the Dow here. You'll notice that the Dow looks way, way better than the NASDAQ, right? These are industrials. Industrials are going to be better funded. They're building actual things. Mind you, there's a lot of debt, and these will fall too if everything else falls. But when the water is still, it might be receding a little bit, but there's still enough water out there, the industrials will continue. Now, there is an algo ping, and this is on the daily, and this is a dangerous look right here. My personal algo has pinged right there, so there is a chance we would see this head down for the reasons that I just described. It's all debt-based. People are going to have to sell positions. Now, I'm not saying it's going to happen, and we could see something really positive happen. We could see next month's FOMC save the day. We could see. But for the moment, things are looking a little shaky, especially in the NASDAQ and also in the SP 500. We have our down signal right here on the SP 500. We have basically what looks to be, if you just look at the general trajectory, that's kind of what it looks like. And if you look at the algos themselves, right, I don't want to just say, hey, look, this looks funny, not very professional. But if you take a look at the indicator stack, there's vulnerability here. Now, mind you, this is the market and markets must go up. So even if it falls, there will be a time, most likely, when it's caught and pushed right back up. But the tech sector is probably what's dragging everything down right now. And that's not a good look. Whenever you have a big move up, and this is the weekly chart, whenever you have a big move up and then price makes a sort of a dome top like this, that's not a good look. That's also an old school Adam and Eve formation. You have a pointed move and then a smaller dome move like that. So there's a lot of ways to look at this that don't look good, right? That, let's just say, they don't look good for the bulls. Now, for us at Algo Factory, it looks great because we'll make money on the volatility regardless, right? We just need price to go in a direction. We don't need price to go up or down, right? We just need price to go in a direction. That's all we need to make money at Algo Factory. And down is a direction. And in the currency markets, we don't have these problems. In the currency markets, there are a lot of opportunities because this is money going back and forth between currencies. So this is like, say, looking at the Japanese yen, right? We've had the ability to trade this really going back a couple of weeks very easily. Lots of money to make in this area. We made lots of money on the way down here. It's been a little bit trickier. It's been a little choppier, but that's fine. You know, when it's choppy, you just rely on market structure. So, you know, we're in there making money even in this environment. So come on over to algofactory.tech and we'll show you how we do it. And again, there's a free algo. The link is in the description. If you just go in there, it'll literally show you how I build an algo. Conceivably, you could use that algo to trade once you optimize it. However, I could give you my algo, the one that I showed you earlier. I have to flip to a different time frame, but I could give you this algo right here. I could simply, you know, just like, hey, here you go. No, actually, I would not do that. I would sell this algorithm for $1 million. That's what it's worth if you want to buy it. But it's a pretty good algo here. Now, not all the trades win. This is a loser right here, but most of the trades win. That's a winner. You know, this is a winner. This is kind of a weak winner. It works, you know, pretty darn well. It's not perfect. None of them are. But I could give this to you and you would screw it up because you don't understand anything about trading. You don't understand a lot of the most important aspects of trading, including the fact that the psychological aspect of trading. If you don't have that down, you're going to lose. It just is what it is. That's why people come to me, because they try to do it on their own for so long, and they even have a good trading method that they bought from somebody or whatever, but they're still not making money and they don't get why. So come to algofactory.tech. You need to learn to trade like a hedge fund pro. Lisa Gray with the kind words, by the way. Thank you. Coffee and Cowboys Charting. Yeah. Cheers to that. Love it. Thank you. Looks like a little data may have just dropped as well. Before we move on to the private live lab, I will take a brief look at that. What do we have here? Well, the only thing that's dropped of any note is Canadian stuff. So I was looking at the USD JPY, and just on the low time frame, it started to make a move up. But it might just be that we're starting to see the markets wake up. Just remember, Chinese New Year might push silver down. And I talked about that in the weekly letter. I talked about why, and I called this ahead of time. So if you do want to know those kinds of things, just go to the link in the algo, get the free or the link in the description, get the free algo, and you'll get that weekly letter too. All right. Thanks for watching. We're going to head off to the private live lab. And do not forget,
join us or die.
Just kidding, you're not going to die.